recording going. So, for my part, good evening, everybody, and welcome to the Market Watch Group working sessions. This is the Trading Foundations working sessions, intermediate session, but I mean, you know, it bleeds back and forth. So, if you're a beginner, you should stay. If you're intermediate and advanced, we talk about very relevant things, so everyone would benefit. We don't want this to be in any way exclusionary. We just want to make sure that we focus on beginner trading issues in the first part and really cater to those of you who are new, who don't want to feel like, I don't know what that is, I don't know what that is, I don't know what, right? So if at any point, Glenn or I, you feel like we're trying to accelerate during that first 45 minutes, don't let us. That's for you. That time is specifically your time to ask questions. If you don't have any, we'll just start talking about, hey, what does the market tell us what to do? That's right. Well, it's not like we don't have something to speak on, but I want you guys to realize that if you're somehow uncomfortable with any aspect of getting going with this is your time. And it seems like that's what we have. So I'm excited because we're going to do a little Thinkorswim work, talk about some order types, things like that. So let's dive in. I feel good to see you. Good to see everybody. My name is Scott Beck. I'll be your host for the next 40 minutes. Quick reminder, we're not advisors. We're not brokers. We don't give guidance or advice per se. This is educational and illustrative purposes only. And let's go to the platform. So, as I said last week, I think it's actually quite advantageous to have Glenn working off of TradeStation. And I'm working off of Thinkorswim because some of you out there might not be on either one. If you're in Canada, you may be in Questrade. If you're in Australia, you may be on Interactive Brokers. So, but other than that, yeah, okay, let's talk about it. Now, I just want to get caught up because I was reading through the chat and I saw some of the discussion from Winsome about options. And I have no doubt Glenn cleared it up. But I specifically wanted to address does the stock need to be above the strike? The answer is no. I've had times. I'm thinking back to when Google was a $2,000 stock, and I traded an option on it. And when I started the option, it was like $100 out of the money. And when it finished, it was like $20 out of the money. It never was in the money. But it was such an expensive option that in order for me to find the level where I was comfortable, I had to go so far out of the money that it was always out of the money. So it's not about is it in the money or not. It's do the variables working for you. I did hear Glenn talking about some of the Greek concepts like delta. Delta's working for you. Theta's, if you buy an option, theta's working against you. So if delta's outpacing theta, you're making money. It doesn't matter if it's in the money or not, right? So what I would say is this. If you're on Thinkorswim or TradeStation, they both have option pricing models where you can just go look at the what ifs. And you can say, if I buy this option, if I buy this really far out of the money option, but the stock still makes the move that I think it's going to make, will I still make money? The answer is yes, especially if it happens within a specific parameter of time. I will tell you right now, when I first got onto the Thinkorswim platform, I had only been trading for, I say only now, what year was it? 2005, I think. 2005. That sounds right. 2006, 2005 or 6. My first account was Fidelity because I worked at Fidelity, so I had to have an account there. I was restricted from what I could do. When I left Fidelity, I had an account at Scottrade. Some of you may have never even heard of Scottrade at this point. Scottrade, way back when, got bought by Ameritrade and absorbed. The way that Schwab has now bought Ameritrade, and it's been absorbed. There is no Ameritrade. There is no Thinkorswim. There is no Scottrade. There's no Options Express. There's a lot of old platforms. It's just sort of the nature of the business, the nature of the beast. When I first got exposed to Thinkorswim, it's because the company I worked with merged with them, and I actually was becoming a Thinkorswim employee. And I remember at the time I was with, is Sandy here? I don't think Sandy's here. I was with Interactive Brokers, and they were cheap, the cheapest in town. This is way back when things weren't commission free, and commissions were something that we as traders had to really work to keep control of. There were still broker assisted commissions and phone commissions. I'm not ready to, anyway. Believe it or not, when I started, stocks were still trading in fractions. I'd be like, oh, SPY closed at 530 in 1930 seconds. Like, what? Yeah, no kidding. But it's an intimidating thing. This is where I'm going with this. It's an intimidating thing, learning a platform, but it's a necessary thing. You just have to commit to it. You just have to look at it. It's okay. I'm going to look. That's why I said last week, you should be watching some videos and some tutorials and just, I made if you weren't here for it, I made a to-do to create an obstacle course for your platform using charts and order types. Place a stop, cancel the stop. Place a stop, cancel and replace the stop. But right, things, so you're just going through the system quickly and getting comfortable with the clicks. The more you do it, the less you're prone to fat finger. What would be a fair commission rate from a broker? I mean, these days, stock should be free. Options should be like 65 cents a contract, pretty much, right? That's kind of like, or a buck a contract, but only on one side. Between 50, 65 cents a contract, maybe 75. There shouldn't be any flat rates. It used to be where you'd pay like $14.95 plus $1.50 a contract. It was expensive when you traded a lot. You're like, oh my gosh, I'm paying a lot in commissions. I had years with thousands of dollars of commissions. Started trading with old discount brokers in the 80s. There you go, PJ, right? So, yeah. But what I would say is, no matter what platform you're on, these are the right questions. Keep in mind, Glenn and I are not licensed. I don't know if Glenn ever, Glenn, were you licensed? I can't remember if he was or not. I had all my license. I had my 7, my 63, my 66, way back when. But we're not licensed on platforms. So I can educate you by showing you, yeah, look, these are the things. When it comes down to the brass tacks, you need to, if you're at all uncertain, you need to protect yourself. But that's what we do. We protect ourselves. How do you do that? You call your broker and you say, hey, I'm about to place this trade. Can I just walk through with you, make sure I'm on the right track? They're licensed. They can be like, yes, that's perfect. Then if it's the wrong order, you can be like, hey, I walked it through with Joe Schmo Broker or Jane Schmo Broker, and they said, yeah, what's the deal? The market trading posture is still the trade. What? Bob, I changed that. Let me see. That is frustrating. I have no doubt I changed that. Trading resources. Group downloads. Sorry, I got distracted by that because I spent a lot of time. Oh my gosh, I see that. You're right. It does say that. I edited it and it didn't save. Okay. Attempt number 2 will come tonight. I'll give it another shot, or else I'll just delete that. If I can't edit that one, I might have to just delete it and place it down at the bottom. Sorry. That's my bad. I was all excited, Bob. I updated it, Bob. It's there. And you're like, no, it's not. It's not. Okay. Yeah. Fair enough. That is Winsome. The sample trading plan outline is good. He's talking about the market posture log in the downloads. Group downloads, the blank market posture log is actually linking to the trading plan outline. I mean, the trading plan outline is very important, but I want you to have that. So, yeah, I will go immediately when we finish here and take care of that. Okay, so let's talk about the platform then. The question was, and this is something that I will put in the obstacle course because we're talking about managing orders for options. So let's talk about what kinds of orders. Are we talking about stop losses on orders? Is that the primary? Are we talking about OCO orders on options where we have both a stop and a target? Let's outline specifically what we want to cover. Stop loss and stop limit. Well, I would say this. I would be I don't like stop limits as protective orders. And it's probably because I learned to trade during, the crash of 2000, where I saw and actually had to see carnage of, someone has a stop limit that they thought was a stop loss. It gaps through, it triggers. They're waiting for their loss part to hit. The end of the day comes, the loss is enormous. And they're like, why didn't my order fill? And I say, well, because you had a stop limit. If you have a stop limit, when it hits your stop, it triggers a limit order. And if that limit order doesn't fill immediately, but that stock is dropping, then there's no protection there, right? So, that's the first point then. So PJ said, what's the difference? Stop loss, stop limit. So stop for either of those is these are both two-pronged orders. Prong number 1 is the trigger. That's the stop part. If it crosses, so if I have a stock, let's just bring a chart up here real quickly, and then we'll talk about placing them. Okay, real quickly though, I don't know how much you processed the market with Glenn. I do want to talk. So what are we noticing? We're noticing that we did not have big volume today. We said today, if we got big volume again, and it only has to be 5%. It was only like 1% above average. You'll notice that we're coming up underneath this level. We're barely on the side of the 200-day. This is still concerning for me. I would say that this is still not done enough to flag this as a break of the consolidation. Now, we still have a couple more days. Who knows what tomorrow brings? And overall, outside of Monday was nasty. Tuesday, Wednesday, Thursday, we've regained. We've regained almost back to where we were on Friday. So what does that make us think? Well, as long as tomorrow's okay, our posture should at least stabilize, right? Should at least stabilize. And if it stops going down, then we start thinking, oh, okay, maybe we've seen this. Remember that we're talking about the concept of a sneaky reversal, where even though it hasn't broken, if it comes down and makes a higher low, I'm still going to consider that valid. It didn't do the classic pattern, but it did the sneaky reversal pattern, and that's enough. Okay, so PJ said buy a call at the money, place a stop to sell the option at 30% less than paid. Okay. It's formulaic, which is okay. I'm okay with that. I think you'll find, PJ, that you move away from like this automated formula. It's a great way to start, where you say, hey, I'm going to put a stop 30% below. You could put a target 60% above. And now you have a 2-to-1. You could do it with half, and you could put 3-to-1. I mean, there's a lot that we can do with automated orders. When we just look systematically at the option price, 70% of this, we haven't really looked at the stock first. And that's where, for me, the option is a derivative. That's what it's known as, a derivative. What does it derive from? From the stock. The stock is what tells me if I'm right or wrong. So what I would say is this: I don't want to stop out at 70% if that's right on top of a support level. I need to give it a little more room. I need to give it 60 instead of, right, or excuse me, 30%. I need to set the stop at 40 instead of 30 and give it a little more room so that my stop is now just below a support level instead of right on a support level. I need to make sure that whatever my plan is jives with the chart. It's got to jive with the chart itself, right? Because that is what tells me if I'm right or wrong. I might not be wrong if it drops 30%. And if that's why I'm saying we don't want to always be arbitrary. We want to make sure that we correlate where on the stock chart would I hit that 30% mark, so that I could say, is that good, or do I need to give it a little bit more room? Let's just take a look here. We'll go through. I'm not expecting to see much by way of viable opportunities. Everyone's like, oh, the market was up. Great, the market was up. Hip, hip, hooray. My problem is you're seeing this pattern over and over again. Old support becomes what? New resistance. My volume is diminishing as it hits resistance, which makes me think it's more likely to bounce back down. So right now is not like, oh, should we get in? No. Right now we're thinking, does this give me that higher low sneaky reversal? Then, okay, that's valid. That is that has a technical foundation behind it. But what I'm saying is we're unlikely to see very much in trades. Now, some people would be like, oh, but doesn't this look like it's going to bounce down? Do we want to be bearish? No. What's my market posture? Still 2.5. I don't want to get bearish right now, only to watch this market start to go up because the fundamental trends are still intact. And then all of a sudden, rather than putting the bullish trades into play and making money on them, I'm having to panic with old bearish trades that are now hurting me, right? And it's like I said last time, you're trying to look left and look right at the same time. If you're trading with balance because you need balance, that's one thing. If you're trying to speculate bearishly because you're like, I'm a trader, traders can put trades on and go both ways. So I don't know. That's my California trader dude accent. I don't know why that. I don't know what made me think of that. That's what it was, in case you were like, what's that accent, Scott? California trader dude who's a little bit overconfident with his perceived abilities of his trading. That's who that is. I want to be the guy who's focused. It's like Bruce Lee said, I don't fear the man who practices 1,000 kicks one time. I fear the man who practices one kick 1,000 times. We don't need to spread our. Let's just be really good at what we do and do it over and over again. Bruce Lee was never wrong. Never. Okay. let's just see if we can find something as an example that we could play with some numbers. Place some analyze. You can see everything looks very similar. They dropped. Now here's the drop. Here's the recovery. So all you fib people, tell me what that's telling you about this retracement to the upside. Boy, it's not much yet, is it? So we certainly should be careful right now because we're seeing this pattern over big sell, little up. Oh, that one's not as bad. That one had a pretty good upswing, so that's a maybe, but not yet. None of these are yet. This is big sell, little up. I like this one a little better too. So I am looking for things like, oh, look at this. Colgate Palmolive. That's one of ours that we like. Chipotle still hanging out, doing okay. Costco. Okay, so Costco. All right, you know what? We're going to say, so I'm going to say Costco's trying to break out of this right now. It's taken out these highs right here already. Okay, so let's just look at this as a continuation trade. This is not a trade I would take right now. But let's just, for the sake of building a trade, I'm gonna look at this with the Heiken Ashi. So I'm gonna take this with today's close yesterday, today's closing price, and then today's Heiken Ashi low for my stop. So I'm gonna put my stop at 815. That's right here below this. Now that it's on a Heiken Ashi candle, I'm saying, hey, it looks like it could be that right there, that first big one. So now I'm hoping to catch something like that. That's what I want. So that move there, we went from 722 to we'll call it 87. 22 to 87. 55 points. 55 points. So now we're going to say our target is going to be 870. Oh, yeah. It's right up here at this level. That's perfect. 870. 870. That's my target. 870. I mean, it's not great. That gives me 30 points of upside with about 25 to the downside. I just don't love it. I don't love it. Let's switch this a little smaller. And I'm going to go with this low here. This is not a trade. If you're paper trading, great. If you live trade this and you come back and you're like, oh, that trade. This is not that. This is an example for us to have to play with. So please keep that in mind. Stop at 820. We'll call it 823. That's a little more tenable. Okay, so now I'm going into Costco. And here's what I'm going to do. I'm going to play with my stop and my target, right? So I'm going to say 823 is where my stop is, and 870 is my target. Was it 870 or 8? It was 870. It was 870. Yeah, it's a continuation trade. I'm not expecting it to be phenomenal. At the money, PJ said. That's fine. Let's do it at the money. At the money is 840, right? Remember what at the money is. At the money is the closest. 839 is closest to 840. That's the closest. Now it's an $840 stock, which means this is a $30 option. It's going to be expensive. It is what it is, right? So something like this, I would probably go further out of the money. But we're going to play with this to show you how this looks, okay? Now, I just clicked on the ask price in order to bring this down here. This is the 840. I'm going to go to 2 contracts. I like to have at least 2. But you can see, look how much risk this is. This is a ton of risk. I'm actually not going to go. I'm going to go out of the money by like 20 points. Let me go to the 860s. Well, that didn't help at all. 850s. These are just so expensive. It's not a great example. It's too expensive. Let's go back. Let's keep looking. I'm going to find something. I promise. Carvana. Ooh, Carvana. Yeah. Carvana just made a new high. Pulled back. Still sitting on top of the 50. Let's put a stop just below this low. We'll call that 127.50. And we'll put our target up here at the high, 154. Beautiful. This will be more fun. This will be more fun. Carvana. This company was on the brink, and they have had a hell of a recovery. 120. What did I say? 127.50. Okay. 127.50 for a stop loss. So I like my stop to be defined by the stock, right? We said 154 to the upside. Okay, and yeah, let's go to the 135. These are still, decently expensive. But let's go 135. And let's drop this down to 2 contracts. Yeah, $500. Okay, so that's manageable, right? That's manageable. Time. Oh, Josh, never mind. The time factor's fairly overwhelming. I'm going to go a little further out of the money on this. I'm going to go to the 145. I'm going to go to the 150. There we go. 150. I'm going to give it a week's worth of time. Yeah, about there. $550. If I'm right, how much do I make? You want to add those. So these price slices are automatic. When you come here, this should just be, if you're on Thinkorswim, these price slices should always be like this. What I want you to notice I did is I put a price here and I locked it. That's normally at 10% right there, 10%. This is my stop, also locked in. Normally that would be down 10%. So now that I've got those locked in, I've also got my date set for a week because I'm losing $25 a day. I need to make sure that I account for that. Yeah. Now, what do I think of MMC? I'll take a look in just a sec, Bob. I won't leave that dangling. Now, when I actually plug the trade in, I have a risk level of 550, a target of 1650, which means I have 3, 2, 1. If I divide 1650 by 550, that's going to give me 3. 3, 2, 1. So my reward to risk ratio is here, right? I have 2 contracts. Now here's the thing. I would love to think that I'm going to get both of them and make that money there. But pragmatically, I'm probably going to come back into this chart and I'm going to say, you know what? I think I should probably take some profit maybe at this high, which is around 147.25, which is around where this body, we only got to that high once for just a little bit and then it dropped. 147.25 though, that's where it's like, hey, if we get to that point, maybe I should take half off. See if the rest of it makes the rest of the way and tighten my stop. That's right. Does that make sense as a plan? Okay. So I'm going to add another slice. I'm going to make this one 147.25. I'm going to lock it. I hit enter and it locks. Then I'm going to reorder. So I have my primary target, my take profit target. That's my current price. That's my stop loss. So you can see I'm not quite getting 2 to 1, but I'm getting better than 1.5 to 1 at my take profit. Okay, this trade is starting to take shape. Yeah? I mean, obviously the conditions aren't ideal, but Now, how would I build this? I could build this all at once. All at once. You have to use conditional orders. If we're going to use conditional orders, we want to make sure that there's a good amount of open interest and liquidity, and that you never let it trigger on the open. So there's two different ways that we can go about this. I'm going to show you both real quickly. How did I reorder the slices? This little menu right here has two things. Reorder slices by price. That just reshifts those to all be by numerical order. The other thing I can do is I can slices to charts. And if I click this one graph here, it's going to bring my, now look at that. Now it has my trade. You see that? That's the entry. There's the stop. The stop is below these last 2 days of price action. That's where we put that. We put our take profit target here at this body and at the top of this candle back here. We put our primary target at the high point from the last move. And now you can kind of see where all of those come from. Boom. I invented that. I didn't. I'm just kidding. There are some features in here that were from my suggestions, but not that one. Okay. Now what can we do with this? Two different ways that we can do stops on managing orders on options. Okay. We can do them based on the options price. We can do them based on the stock price. So I'm going to show both. I'm going to have to kind of go fast, but this is recorded, so you may have to go back to the end of this to watch it again. Fair enough? So I'm going to do this all at once. So from the Analyze tab, I'm going to right click and I'm going to create a duplicate order. That's saying I want to do this trade. Now that I know I want to do this, I can create a duplicate order. That puts me into the trade tab. And here I'm going to do a first triggers to OCO. To OCO. So I can have, now I'm going to do the first one on the price of the option. So if we were going to lose $550 on two contracts, that's $275. How do I make that an options price? I divide it by 100 because it's 100 shares per contract, $2.75. That would be my stop price. The entry minus 275. Not at 275, minus 275. So the stop, if we're entering at 570 minus 275, we would set our stop loss at 295. Okay? So I'm going to go ahead and just start working this. So I'm going to say this is a good tail canceled. I'm going to go ahead and create an opposite and a second opposite. But each of these is only going to be for one contract. No, I need to do all of these. Hold on. I need another opposite and another opposite. Okay. All of them are for one. Now, the first one is a stop. The second is a limit. This one is a stop. The next one is a limit because these are connected. The stop and the limit are connected. Now, this is a stop market versus a stop limit. Remember that market means next available price. Market means next available price. That means you are guaranteed to execute, but it's at an uncertain price. We don't know what the price is. Could be up, it could be down, it could be the same. We don't know. A limit order guarantees price, but has uncertain execution. So we flip-flop those. So if I say I want to buy this, but only if I can get it for 570, I'm only going to get it for 570 or less. That's it. I will never pay 571. But that means if it opens tomorrow at 575 and then takes off, I'm not in the trade. And the same thing is true with sell stop limits. That if I put a stop loss and it triggers and then it triggers a limit order. The limit order says it can only sell if it gets this price. Well, what if it's not that price? Then you're not going to sell. And if the stock keeps dropping from there, you're not protected. So when we do a stop, we want to stop market or stop loss, which means it is a stop followed by a market order. That means that you're going to get the next available price. Okay, so the stop is going to be at $2.95. Nope. $2.95. If I could type right. And I'm going to do the same one down here, also at $2.95. Now the target price, let's figure out the target price. If I made $900 on 2 contracts, that's $450 on one. That's $4.50 for the first target. So I'm going to take $450 on top of what I have there. That means it's going to be $10.20. That's my first part of this trade. I'm taking my analysis from the stock and the profit loss levels, and I'm converting them into option amounts so that I can have option level values. Right? Option level values. This is not really accounting for time decay, so it may or may not have me go that way. Now, if I do 1,650, that's this maximum profit up here divided by 2. That's $8.25. That's $8.25 in profit on top of the $5.70 that I made. That is a $13.95 target price. Boom. There it is. Like I said, you might be like, Scott, I have no idea what you just did. You'll probably just have to replay it. What I did was I first figured out what would the gains and losses at my different price levels be after a week. So I have time decay built in. Then I'm just dividing that by the number of contracts and by 100, and then I'm just converting that into an option price. How do I make $800 on an option? If the option goes up by $8 a contract, I make $800. That's not that actually complex. We just are trying to break it down into a simpler process. Okay. So this would be, if I put this trade on, I'm buying 2 of these contracts at $5.70. Once I'm in it, if I'm wrong at $2.95. I have one at $2.95 here, one at $2.95 here. If I'm right at $10.20 and $13.95. If it gets to $10.20, it cancels the order at $2.95. That's how an OCO, one cancels other. When one fills, the other cancels. If this dropped to $2.95, both would fill at $2.95, stopping me out. I'd lose $550. I'm out of the trade. And there's nothing left. So this is a trade where I'm risking approximately $550 with the ability to make not $15.50 because we've decided to split it in half, but still probably like $1,400. So we're getting, 2.5, 2.7 to 1. That is the option version. Okay. I'm gonna go ahead and edit this now. Now, the other thing that I can do is I can make everything conditioned upon the stock. I can say I want to buy this tomorrow at $5.70, and then once I'm in this trade, I want everything to be market order. Market order. Market order. Market order. And you might think, Scott, how does that possibly work? Because each of these are going to become conditional orders. So this is a conditional order where I can say this is the first one. And I can say I want to sell if the stock goes below, and my price is $127.50. $127.50. Okay? And that's it. Then I come to this one and I say, I want to sell this if it goes at or above $147.25. $147.25. You'll notice what I have here. Is just sell at market. if the stock does what? Goes at or above 147.25. Then I have another stop loss. This one is again below 127.50. And I hit save. And then here I say if we go at or above 154, save. Now, when I hit confirm and send, I have a different type of an order confirmation box. Now it says, I still want to buy at 570. That's the same starting domino. But this time instead, it says, I want to sell this, right? Now this is still an OCO. So these two are connected. These two are connected. It seems like a lot, Winsome. I know it seems like a lot. Why are we doing this? We're learning how to program the platform to help us manage our trades. That's it. Now, if you're just paper trading, do you need to learn how to do this right now? No. Just place buy orders and then place sell orders and then try one of these. And then try one. It takes some time. And then all of a sudden you're like, oh, this isn't so bad. This will be in the advanced obstacle course. The advanced broker obstacle course. I'm glad you like this, PJ. Because this is, I to this day, I still don't trust myself completely. I want as much automation as I can. I would rather it just hit it, fill it. Oh, good. Look what happened. Yay. Right? Or, oh, that sucks, but hey, I'm out. Now, buy these two contracts at this price, and then once that happens, both of these would sell at the same time at 127.50. It drops at or below 127.50. Both of these calls sell. Both of the other two contracts or orders cancel. Yes, PJ. It's hard, right? Especially if you ever have like 12, 15 trades on. Just like, and then it's easy to come in and be like, just cancel and replace. When it's time, if we got to 147.25 and this order filled, I'm not going to still have a stop at 127.50. I'm going to raise it up and then raise it up, and we can just do cancel and replace, and all you got to do is cancel that condition. Just when you do a cancel and replace, you just change the condition. 127.50 becomes 132. 132 becomes 137. 137 becomes, right? And you just keep moving it. Managing the trade. Oh, it's so much better than us having to sit and stare or think about it. Now, does it create work for us sometimes on nasty days in the open? Yes. Yes. On those days, you want to cancel those orders. Don't let them, right? Don't let them fill you at market on the open. This is two different ways to place it from the get-go. Now, right now, I don't have anything on this account to show you like, oh, what if I just wanted to manage a trade that I already had? We don't have to manage it from the beginning. You don't have to do this first trigger OCO. You could just go in and then say, oh, now that I have my trade, let's just right-click and do a create closing order and then put a closing order on it and manage it. I just want to make sure, like I said, this is the intermediate class. I got to expose where we're going. Now you can go back and practice. Any questions before we wrap up? I hope I effectively transitioned what Glenn was doing into this discussion. I know you guys wanted to spend a little time on the analyze, and it doesn't have to be a specific trade. It can just simply be, hey, what's my thought process when I come into this analyze tab? I want to what if the hell out of a trade. What if it does this? What if it does that? What if it goes faster? What if it goes slower? And then I can see all the potential ways that this trade might move. It's a lot harder to get caught off guard when we do that. I'm going to pull it up right now, Bob. I told you I'm going to look at it. A promise is a promise. I'm a man of my word. I like it. Is this a retail? Marsh and McLennan. What do they do? I can find out. Hold on. I'm just lazy. Analyze, fundamentals. Oh, it's financials. Is that? No, that's not right. It's professional services company. They provide advice and solutions to clients in the areas of risk, strategy, and people. Oh, what do we consider that? Interesting. Okay. It's got a nice chart. It's trying to bounce. I would say you probably even have Heiken Ashi candles. If you're going to trade something bullishly, this is what it should look like. Not yet. You're close, though. Right? A little bit more bullishness tomorrow, and this kicks into gear. I like it. Good recognition. Cool. Okay. Does that help, Bob? Is that maybe validating your what you were seeing? Let me know. Tomorrow morning, Glenn will be here to watch the market open with you, chat about it, talk about it. Do we get another day of buying? Is it already starting to kind of ebb, and now we got to see what the sellers do? We'll see. Learned a lot tonight. I love it. That's what these are for, right? That's what these are for. So tomorrow morning, Glenn will be on at 9 a.m. until 10 a.m. And then tomorrow's market wrap-up session is at 3:15 Eastern. We're on for the last 45. We basically watch the market close together, talk about how we're unwinding and setting up for the weekend. So first session, 9 a.m. Eastern for an hour. That's in the meetups. That's a little more casual. Second session, 3:15 p.m. Eastern. That's in the stage. That'll be me walking us through, talking about it. That's the schedule. Good to see everyone. I got to tell you, some of the people who have been coming for a while, I told them, I said, hey, we're bringing on a crew of new traders that are going to really deepen the experience. And you guys have done it, man. You've held up your end. Keep it up. We'll do our best to keep holding up our end. Let's always keep the conversation going in Discord. What a resource, right? To have that ability to possibly find another like-minded trader that you can just chit-chat with. What are the extra meetups? So the extra meetups are just to promote and solicit you guys meeting with each other. So like Tuesday, Thursday is really more of a chat. So if you just wanted to kind of get into the Market Watch chat and send messages. But I've actually seen times where people are like, hey, do you want to just go into meetups? Because they'd rather talk. It's kind of just presenting options and helping you get comfortable with the different ways to interact with other subscribers. Because the community is only going to continue to grow and strengthen. The sooner you get from, it's like having a trading partner on demand, right? Someone else who you're like, hey, you looking at anything? What do you think? Things like that. Does that make sense, PJ? Let me know if you still have questions. What we've been doing is throwing Glenn into a couple of those on Wednesday afternoon and Friday morning. But typically we try to orient those around market open and market close. That's when we typically have the most to say. Awesome. All right, you guys, have a great rest of your night. It's good to see you. See you tomorrow. As always, happy trading.